let's just face it. There's no long-term liquidity will go higher. The money supply will expand. That's just reality. There's just no way in our debt-based system that we could sustain this without having a debasement of the currency. That's just the truth. So we will still see the expansion of money supply and Bitcoin price going up, alongside that. So that's just the reality.
One of the most significant developments Lavish highlights is the increasing acceptance of Bitcoin by banks. Recent regulatory changes allow banks to hold Bitcoin as an asset, enabling them to develop financial products around it. This marks a paradigm shift in how traditional financial institutions interact with Bitcoin. Banks can now offer collateralized loans using Bitcoin, allowing individuals and institutions to leverage their holdings without selling them. Lavish points out that many long-term Bitcoin holders do not want to sell their assets due to tax implications and their belief in Bitcoin's long-term appreciation. Instead, they can use their Bitcoin holdings as collateral to access liquidity for mortgages, business investments, or other financial needs.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Bitcoin does move off of liquidity. We know that. And like I said, it's because it's being treated like a risk asset. So as liquidity expands, Bitcoin follows. It lags by about 3 months, somewhere around 2 or 3 months. And so we saw liquidity drained at the end of last year. And so now it's coming back up. But Bitcoin's it's still lagging. It still hasn't, if you chart them against each other, it still hasn't reached that bottoming out on liquidity. When it, after it does, it will start to rise again. Maybe it has gotten pretty close here in the last couple days. But so that is important for there to be liquidity. But let's just face it. There's no long-term liquidity will go higher. The money supply will expand. That's just reality. There's just no way in our debt-based system that we could sustain this without having a debasement of the currency. That's just the truth. So we will still see the expansion of money supply and Bitcoin price going up, alongside that. So that's just the reality. And so now the banks, this is the big deal, is the banks can actually hold Bitcoin as an asset and build products around it. They can build lending products. They can build collateralized products. They can do things that they couldn't do before. And it's a really big deal that if you have Bitcoin and you can work with your bank, whether it's JP Morgan or if it's Wells Fargo or Chase or Citibank or whatever it is, you can work with them to use your Bitcoin as collateral for things, or they can create collateralized products or lending products for you. It's going to be a big deal, really big deal, because I know there are a lot of Bitcoiners out there who sit on a massive amount of Bitcoin that they don't want to sell, but they want to somehow monetize to use in their favor. They don't want to pay the taxes on it. They don't want to get rid of it, but they want to find a way to use it and benefit from it. That's going to be, I think that's going to be a huge deal. And eventually it'll trickle down into things like, mortgages and loans against them and using Bitcoin in just, residential mortgages for collateral. So you don't have to put up your 20%. You can put up 10% cash and 10% Bitcoin or something like that. And it's going to be, I think this is going to be a big deal for both consumers, but really a big deal for the banks. They're going to be rushing to get these products out later this year as they get their head around and get their teams around this. And so I think it's going to be a really big deal. And so what does that mean? Well, it just continues to march down that institutional adoption road, where you have institutions are embracing Bitcoin in particular, and they're going to be using it to build products and sell products to people. Is it in the best interest of Bitcoiners to go and have banks in control of this stuff? No. But does it help institutional adoption? Yes. And if that's the case, then it ultimately it's good for Bitcoin adoption. It's just a philosophy of whether or not you want institutions involved. It doesn't matter. They're getting involved, and that's kind of it's a big deal for Bitcoin price, in my opinion, and that will affect it over the course of this year and the next year. Even though it's down here under 80,000 today, I actually see this as a huge opportunity for my fund to go and get exposure in places that will give me more upside in this Bitcoin ecosystem because of the price being depressed here. I think it's a little bit of a gift for us. So, but again, I'm a long-term investor. I take a very long-term view on this, and I'm optimistic about the future of it. I hate the question, but it's easy. Long term, I see the Bitcoin price higher, much higher. And that's because of the debasement of the currency, every single currency that's being measured against it. The only one that isn't debasing as rapidly as gold, But look, Bitcoin's a better version of gold. It's not even close. It's such a better version of gold. I know people like to wear gold and they like to, have it in jewelry, and there are definitely use cases for it, and there's utility for it, clearly, obviously, but there's different utility for Bitcoin, and I think that there as a base layer, there are going to be a lot of things built on Bitcoin, second, third layer, and they're going to be important to the financial system, and so that having a trustless system like this is just. It's revolutionary. It's going to change the financial world. And if you just keep it to first principles.
Despite Bitcoin's long-term bullish trajectory, Lavish acknowledges the short-term volatility that often confounds investors. He points out that Bitcoin recently experienced a sharp sell-off after reaching an all-time high of $100,000. Despite these short-term pressures, Lavish views the current price dip as a significant buying opportunity. He believes that investors with a long-term horizon can benefit from accumulating Bitcoin during periods of market weakness.
The price of Bitcoin, while the whole market is rolling over, while it's already reached all-time highs and had that euphoria of the Trump impact of the new administration, a positive administration, you've got the ETFs, you got the ETF options, you've got SAB 121 repealed. We're going to talk about that. You've got the gap accounting rule change. Now you've got the ending of choke point 2.0, hopefully soon. I still have seen some things in my hedge fund that suggest it's still happening, but hopefully that ceases very soon. And regulation around all this, regulation around stable coins, regulation around which of these cryptocurrencies are deemed tokens and which are deemed assets, and all of that stuff. Like Bitcoin is the only one that right now is deemed as a commodity. So really, really important to have that clarity. So those are all tailwinds for Bitcoin. So why is it selling off? Well, it reached an all-time high. It hit that $100,000 mental level, and it stayed up there for a little while, and then it sold off. And once it broke back through 100,000, now that becomes a resistance level. And so it's a mental level, it's a major mental level. You had a lot of from what I understand, there are a lot of OGs that have sold around the $100,000 level. They've been holding on to this thing forever, and they've made massive, massive, massive amounts of wealth in US dollar terms that they can go and turn around and use to buy other assets like houses or planes or boats or whatever they're going to do. And so they're cashing in. They're going to go enjoy some of that they held on for so long. And that's what appears to be happening from what I know. So, however, still price-wise, why would it sell off from 90-something thousand down all the way down to 80,000 from after the news that the strategic Bitcoin reserve was established? In the price of Bitcoin, clearly there was an event-driven trade going on where you had short-term investors looking for this to pop. meaning Bitcoin to run back over 100,000, go to 120, 150, whatever they had calculated in. And they expected that to happen if and when a strategic Bitcoin reserve was announced, along with a purchase plan. But the purchase plan wasn't announced. So whatever amount that they had mathematically factored into the price of Bitcoin had to be taken back out. So just to keep everything simple, if Bitcoin's at $100,000 and these momentum players thought that it could trade to $150,000 if the Bitcoin reserve is announced with purchases, then that's a $50,000 move. Okay, well, if they figure, or let's just say it's 80,000, it's trading at 90,000 because that's where it was. That, you know, in that $90,000 is the probability that that price would go to $150,000, whatever that probability is, 25%, 30%, 50%, whatever it is. Well, that is telling you that if it was trading at $90,000, that there was a 50% probability priced in that it would trade back to 100 at least, right? Because 50% probability of a trade to 110, let's say, 50% probability would mean that the price should be about $100,000 that's expected to go to. Well, it didn't. So you've got to extract that back out of the price. You got to extract that probability that's embedded in that $90,000 price out. And so that takes it back down by that amount. So that's the problem, is that was in the price and now it's being taken out at the same time, Brandon, that you've got all this uncertainty going on. And Bitcoin has acted like the leading risk indicator for a long time now. Whether or not it should be, whether or not that we believe it is, it's what the market believes. And the market believes that it's a risk asset right now. And so it's going to treat it like that. And so when people get margin calls, they sell it. They sell this along with other risk assets that give them liquidity, especially over the weekend. When you come into a week that you expect, you know, some downside volatility in the market, what are you going to sell? Well, the only thing you can sell is Bitcoin because it trades 24/7. And so they're able to do that. So that's a long-winded answer of why Bitcoin traded down, but the simplified version is, well, embedded in the price of Bitcoin last week was the probability that this Bitcoin reserve would be announced with some sort of buying strategy. It wasn't, so that had to be extracted from the price, and here we are.
James Lavish provides a compelling case for why Bitcoin remains a strong long-term investment despite its short-term volatility. By understanding liquidity cycles, embracing institutional adoption, and recognizing Bitcoin's superiority over traditional assets like gold, investors can better position themselves for future gains. With banks developing Bitcoin-based products, regulatory clarity improving, and global liquidity trends favoring asset inflation, the long-term outlook for Bitcoin remains bullish. While market dynamics will lead to periodic price swings, the overall trajectory points upward. As Lavish aptly states, Bitcoin is a better version of gold, and its role in the global financial system will only continue to grow. Please like and subscribe.